Today, the stock market had a very impulsive bounce off of support, and we are now entering what could be the short squeeze territory as we are approaching some very critical resistance. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today on SPY, we were up 1.33%, and we did get that strong bounce off of our support, and we came all the way back up to critical resistance at 414. So very quickly, I want to recap what I was talking about yesterday, and then we'll continue to look at the technicals. Do not for 1 second think that the market was not already aware of the risk of recession later this year. This is no new news for the market. There is not a single big money player in this stock market who has not considered the probability of a recession later this year. So it is absolutely going to be a nothing burger. We are still going to be following price action only. So if you opened up a ton of short positions today because you think there's a recession coming, you are going to get absolutely destroyed by the market. All right, so the reason I want to hammer home that point is because I'm trying to show you how important it is to follow what the chart is telling us, and that means we only care what the current trend is and what the price action is telling us. So yesterday we were at support in a bull trend, and if you are at support in a bull trend, that is when you buy, take on risk because you have very well-defined risk, and you prepare for the high probability that trend is going to resume to higher prices, and that is exactly what happened today. So just remember, if you are watching my channel, that is exactly what we are doing here. We are following what the chart says, and we are letting the chart do all the talking. There's still so many people who want to talk about all of these fundamental things and want to talk about why the market's going lower while the market is going higher. So let's not be those insane people who keep trying to short a bull trend. Let's wait for the bull trend to roll over and die, and then you can short it like the wind, bullseye. So right now, we do not have a bear trend. We have a bull trend, which is very evident with the price action above all of the positively sloping moving averages, and all of the moving averages are still stacked to the bullish direction. Remember, the 20 simple moving average just recently crossed back over a positively sloping 50 EMA. So this bull trend is only gaining momentum. Now, with that being said, you still have to manage your risk. And if you're a bull that bought at support, we are now at critical resistance. So you should be locking in a lot of that profit. We now need to break above 414 to go to the next target higher right around 417. And then above 417, we get the bull breakout to easily get into the 420s and close the gap above. We cannot look too far ahead, and even though it's likely we are going to 420s, we need the confirmation of the break of these two critical resistance levels. So yes, we still have a bull trend, which means we are likely going to continue to climb higher. So you're now going to manage your risk as bulls at the new risk level of the breakout, which is now SPY 411. If we get a couple of closes above 411 and break 414, we're well on our way to higher prices. And very quickly here, if I just hide everything and show you the closing prices, you can very clearly see that SPY just broke out to another higher high after another higher low, which is exactly what defines a bull trend. So do not be those insane bears that keep trying to call a top. Just wait for the market to roll over and die, and then you will be able to be a lot more bearish. On the NASDAQ 100 triple Qs, we were up 1.96% today, and again, we bounced right off of where you would expect in a bull trend at the critical support level, which is your risk level. I talked about this before. There was a good chance we would come back and test that breakout as support before we went any higher. And right now, with this impulsive bounce and a break to a higher high on the daily chart, it does look like we are pivoting from the positively sloping 20 simple moving average and that breakout zone at the February 2nd high. That means we can easily go up there to close the gap at 322 and then hit our double bottom price target at 327 as long as we are above the support between 311 and 312. So you have very well defined risk there. If we do break down below that support, then you can get more bearish for the gap fill at 308 and the test of this support zone down here right around 306. Remember, we're in a bull trend, so you need price action to prove we're breaking out of the bull trend, which means we need to break down through support. On the Dow Jones, we were up 1.12% today, and again, the Dow Jones is just continuing to build on this bull trend, still getting very impulsive bullish candles off the rising 5 EMA. I said there was a good chance above the breakout at 335. We were pushing back into the 340s, and we closed just above 340 today, with our next upside target between 342 and 343 and then 346. This is likely where we're headed as long as we're above the breakout zone at 334. If we break 334, we could go down and close the gap at 329. On the Russell 2000 IWM ETF, we were up 1.33% today with an inside day after yesterday's bearish engulfing candle, and we did hold support at 176, but we did not break support at 178.5. We need to break that resistance and get back over the 50 EMA to test our critical resistance zone just above 181 and fully close the gap above. And if we break through that resistance, that is going to be our bull breakout in the small caps. You could stay bullish above 176 or this support zone down here right around 173. On the ARKK ETF, we were up 4.01% today with another inside day just like the small caps, and we are getting rejected at the 200 daily moving average of resistance right around 39.5, and we're not bullish until we break 40.5. Critical support is 37 and 36 because if we break down below those necklines, this will look like a double or triple top, which sends us down to close the gap below 32. On the VIX, we were down 6.6% today, and the VIX got absolutely obliterated today after that rejection from 20 yesterday, and the follow through today, we are now closing down below 18. This is very low VIX values, and this is very different behavior in the VIX than we saw during the bear market, which means fear is continuing to leave the market, which is exactly what you see in a bull trend. On Bitcoin, we're currently up 1.35%, and Bitcoin is continuing to build that bull trend on that breakout above 29,000 with the next upside target at 31,800. You could stay bullish above these breakout zones at 28 to 29,000, and that's your risk level if you're long on Bitcoin. On Google stock, we were up 2.67% today with that nice bounce off of the gap up open above resistance, and we're well on our way towards our price target at 110. And remember, that is likely going to be where we get to before earnings, so that's going to happen very quickly as long as we're above this critical support zone. On Amazon stock, we were up 4.67% today with a very impulsive bounce from our critical support at 98, and we're back above some critical resistance at 102. This is looking a lot more bullish, especially above 104, because that's our higher high breakout after a higher low, which will likely take us to my price target just below 109 and possibly even as high as 115. On Microsoft stock, we were up 2.24% today with a very bullish candle closing right on top of resistance at 290, so we didn't get any closure on whether or not we're going to get the breakout. But remember, above 290, we're likely going to 296, and we need to break down below support at 283 to close the gap at 281 and then 276. On Nvidia stock, we were down 0.12% today as Nvidia has the second day in a row closing down below the support at 267, so it does look like it could be rolling over and getting ready to go through a correction. Below 267, we're at risk of coming down to these lower targets at 258 and 242, but pay attention to those Bollinger Bands because they're very squeezed and it's not going to be a quick trip down to the 240s, so if you're still shorting this stock, don't expect this to move very quickly. On Tesla stock, we were up 2.97% today, and Tesla is fighting for its life right here at critical support at 183, and it's bearish as long as it's below this 20 daily moving average at 190. If you want to get bullish on Tesla, you need to see a break of that resistance, or you can just set your risk right here, right around 182 to 183, and wait for a breakdown below that level before you take your loss. Below 183, we have support at 173 and 167, and if we break all that support, look for the gap fill at 146. On Apple stock, we were up 3.41% today, and Apple did exactly what we were looking for, which was this bounce off of the positively sloping 20 daily moving average and critical risk level at 160. The bounce from here broke the resistance at 163 and our resistance trendline, which means we are likely going to see the next price targets higher at 169 and the gap fill at 171. So continue to manage your risk at supports at 163 and 160. On the financials, we were up 0.9% today as we continue to march higher towards our target at 33 as long as we're above support at 32. On the industrials, we're at 0.37% today with a nice bounce off of the 20 daily moving average and the second day in a row closing back above all the moving averages, so we are developing a bull trend. The healthcare sector was up 1.3% today with a very nice break of that critical resistance at 134, so we continue to look more and more bullish, and you can tell from the moving averages we're very close to having the full bull trend. On the energy sector, we're up 0.62% today with another bullish candle above the rising 5 EMA, and the bull trend is only strengthening the longer we continue to close above 84. So jumping back over to the S&P 500, as I continue to warn you, do not follow what you're hearing in the news or what the Fed is saying, just follow what the chart is telling you because the chart cannot lie to you. If you're following price, you're getting instant information on whether the market is going higher or lower from critical levels, and I'm already giving you the critical levels to pay attention to. So remember, the trend is your friend until the end, and the price action will do all of the talking from here. Be aware of both scenarios and make sure your trade plan is ready for anything that happens from here, and then just trade it accordingly based on what the price is telling you to do. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks General Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETST triple Q and SQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you are crushing this market, and as always, I will see you in the next episode.